Ping An does a tremendous amount, allocates a tremendous amount of resources every year to research and development. One of the great things about working at Ping An is you are surrounded by absolutely world-class data scientists, programmers, developers, and so we have a lot of capabilities in-house. It was very clear to the founder of the management team that you can't innovate everything in-house. And the Voyager Fund was originally constituted to try to make sure that we were accessing interesting opportunities on a global basis. We think of ourselves as growth stage investment vehicle. The vision that we have revolves around 2 or 3 key themes. And the first overarching theme is that of platformization of the functional stack of traditional financial institutions. If you look at a bank today, an insurance company today, the processes that they use to execute their historical mission of extending credit, of underwriting risk, these are very idiosyncratic processes that vary dramatically from one institution to the next in their precise execution. They are generally very clunky from a technological standpoint. Oftentimes you're dealing with a bank that's been around for 200 years. There have been a million different acquisitions. Systems haven't been integrated. We think the story of the future is going to be one of dramatic change that affects traditional financial institutions, but it's not going to be, so it will be a dramatic and wrenching process, not always a great process for traditional financial institutions, but it won't be a process that results in their demise in the same way that Blockbuster went away at the hands of Netflix. The other big vision that we have for where the direction of travel in financial services is around the proximate role of ecosystems in finance. We have 600 million digital users of different digital ecosystems across automotive, healthcare, finance that we have built at Ping An in China. And those digital users in our ecosystems generate over 1/3 of our new customer traffic into our traditional financial services business. And we see that as the direction of travel for the entire industry. Not everybody is going to own their own ecosystem. That's unrealistic. There are plenty of other smart investors out there, plenty of very clever people with different kinds of advantages, but the one thing that we have that nobody else has is the ability to bring Ping An to bear upon a situation. So we have the ability to deploy Ping An in ways that can be very helpful to a fast-growing company in fintech or in health tech. We are a very agile, a tech-driven company. I believe in financial services. What we do is almost without parallel. We also have 1.4 million employees and agents, and we're based in China. We can be kind of painful to interact with if you're 2 people in a garage halfway around the world. We tend to invest in businesses that are consistent with that vision of the proximate nature of ecosystems, the platformization of infrastructure, and we try to invest in companies that are sort of at the Series C level. We're absolutely bringing technologies from abroad into Ping An in order to do what we do better. We don't do it for every single company we invest in. We think of ourselves as an investment vehicle. Our goal is to be a responsible steward of capital. And we seek out companies where we think that over the life of the investment, there's going to be a good chance for us, because of who we are, to add meaningful value to that company. That means that not every company we invest in will we be doing things with them right away. The expectation is that that should be a more natural process that emerges over the course of the relationship. The idea of modernizing your tech stack, of moving to a more platformized and more modern system of infrastructure for financial institutions has just been dramatically accelerated by virtue of everyone having to work from home. The concept of digital ecosystems playing an ever more important role in the life of the everyday consumer has only become more true before COVID. Access to reasonable financing solutions has always been a challenge for SMEs, and it's a challenge that has only gotten worse in 2020. One of the things that we think is very interesting is finding intelligent ways to address that need. We think that different parts of trade finance and supply chain finance are ideal avenues to democratize access to finance for SMEs. So a lot of our focus right now is on finding companies that operate in supply chain finance and trade finance, and finding ways to partner with them in ways that are mutually beneficial. My prior life, I was an investment banker. Over time, the flavor of the deals just shifted inexorably to always having some kind of a technology component. It just felt like the direction of travel was inexorably kind of bringing technology and traditional finance together. I think that China really presages the trajectory of financial services for a lot of the rest of the world. You have very competent, very credible competitors of ours in BAT who are moving into finance. And you have financial institutions who are, I think, quite a ways ahead of Western counterparts. When you engage with any international financial institution, they are going to have exceptionally competent, well-qualified tech people who will crawl all over your solution and make sure that it meets all of their standards, and their standards are by and large exceptionally stringent. And once you get through that, I think there's a pretty high comfort level with the solution, no matter where it originates. So I don't see a tremendous amount of reluctance to engage with robust world-class fintech solutions from China. It's one of the reasons you see so few quality platformization solutions, so few quality fintech infrastructure solutions coming out of markets in Southeast Asia, in Hong Kong, because you don't have the underlying regulatory support for those sorts of things. You have open banking in name, but when you look at what you actually get, it's quite thin still.